All right, let's get started. Right, I think so. Let me do the honors. Uh, Good morning, good afternoon to all our audience and to our panelists. Thank you for joining us for what promises to be a very interesting discussion around data and its impact, not just on regulatory compliance, but even getting deeper insights into institutional performance. Right. Without further ado, I am very happy to introduce our speakers for today. Our panelists come from Codebase Technologies and Bank BI, two leading global financial technology solution providers who partnered up together to deliver real-time financial performance and regulatory data to our customers across the globe. Our first speaker of the day, and let me start with our first panelist. We've got Mactel Brenholg. Mactel is our Chief Operating Officer at Codebase Technologies, a well-respected leader known for being resourceful through her innovative approach to drive revenue growth and operational excellence. Mactel comes with over 20 years of experience, having worked across multiple touch points in the customer journey and well versed in IT, fintech banking space across Africa, Middle East, Europe, and Asia Pacific. Having spearheaded leadership roles in startups and corporates, Michael now heads a very pivotal role at Codebase as our Chief Operating Officer. Welcome, Michael.
Thank you, Noel.
The next panelist that we have is Graham Goebel, CEO and founder of Bank BI. Graham comes with over 40 years of experience in IT and financial services, having worked both in international banks in the UK as well as the financial service software industry, starting and ranging as a CIO for a leading UK-based bank way back in 1998 to spearheading the financial software industry with various players and roles. In 2013, Graham started Bank BI, a leading financial performance as a service organization. He has an honors degree in business studies and is married with 3 children and 7 grandchildren. Uh, Graham, welcome to the panel and thank you for your time today. So let me say you do not look like a grandfather, but thank you very much for joining us today.
Thanks, Nehal. Yeah, it's a pleasure to be with you here today.
Great, thank you. Last but not the least is our moderator for this event today, Rahil Iqbal, our managing partner at Codebase Technologies. Rahil is a seasoned financial technologist, having advised leading financial institutions on 4 different continents, focusing on finance, technology, strategies, product development, and tech implementation. Rahil is an influential speaker and facilitator in various technology and finance related topics, including banking, payments, and fintech in GCC and globally. Rahil sits, of course, on the board of numerous fintech startups and advises traditional financial institutions on their fintegration strategies. Rahil has played an instrumental role in the launch of 3 digital-only banks within the GCC and Europe, and was also recently recognized as one of the top software CEOs of Asia by the Software Report. Welcome, Rahil, and thank you for joining us today morning.
Thank you, Nehal. Happy to be here moderating this exciting panel today with our guests.
Brilliant. Now, before I hand over to Rahil to take the session forward, just some quick housekeeping points. Please ask questions anytime during the session. There is a Q&A button right at the in the middle of your panel. So please do not hesitate, ask as many questions as you can. The panelists and the moderator will try and address those questions at the end during the Q&A session. And if we are unable to cover all the questions, we'll be more than happy to write down our responses, or they'll be happy to write down our responses, and we'll be sharing it back via email to you. So please do not hesitate to ask any questions around the topic that you hear today. Second, we'll also be running some polls during the event and request you all to participate and share your views. Our speakers will also be sharing their insights on the poll results at the end of their discussion. And so that would help you define your financial performance and regulatory reporting strategy on the way ahead. Well, without further ado, Rahil, over to you.
Thank you, Nehal. So welcome everyone. Happy to have a full house today. with our participants. And thank you, Graham and Markel, for joining this panel. A very important topic today we would be discussing the data-driven impact, specifically for financial leaders, and how banks within these regions can actually look at to develop or to implement solutions with the data-driven aspects to it, and how real-time data helps or can help these financial institutions approach the today's disruptive issues. From a webinar perspective, I'll be taking you through some key insights today first, and then we'll rightly jump into an open discussion with our panelists. So basically what we would like to discuss as part of the current situation where we are today with the pandemic around us, the unfortunate event, everything closing down, complete impact on all kind of businesses. The current situation, basically, there was a survey done for top 450 CFOs globally within the financial sector, and 99% of them believe that operating with real-time data has become now critical to navigate the disruptions today they are facing, such as COVID-19, recession, interest rate changes, and so forth. So everyone basically thinks that real-time data has now become the necessity as compared to previous years where it was good to have, but people were still evaluating that. But today, everyone is of that opinion that the real-time data is critical for them as a finance leaders to be able to navigate, to able to take decisions, and able to manage the situations around us caused by this unfortunate pandemic situation. And unfortunately, only 16% of the respondents informed that they have moved to real-time data and financial processes during the last 2 years, which is a very insignificant amount when it comes compared of 99% of them accepting that there is a critical need. And 33% of these finance leaders have budgeted to become or to move to real-time financial operations in 2021. So there is a trend coming out, which shows that people have not taken up that at this point of time, but they are putting in the foundation to move to real-time finance operations. And today's webinar is around how do we enable real-time financial operations for banks? What are the implications? What are the best practices? What should be done? And what are some of the challenges which they would face, and how can we resolve those challenges? The key concerns of the financial leaders within the banking sector highlighted, 49% of them highlighted that there are impact on interest rate changes due to the uncertainty in the economy, and basically ability to track those interest rate changes. The impact of the interest rate changes on their books is very critical for whether we're taking a new decision or whether they are strategizing for the next 5 years. So interest rate changes has been identified as one of the key concern which they would like to track and which they would like to basically see the impact of those changes onto their financial health. 47% of them are expecting a recession, and hence feel that having that information or the impact on their books or on their customers' behavior would be very critical for finance leaders to take appropriate risk manage or risk mitigation activities and decisions to avoid or to basically manage such a situation. 47% agree that there has been a disruption due to pandemic and they had to change their model of working or the model of how do they do banking today, what kind of products they deliver, and what kind of services they need to implement within the finance as well as risk management or compliance due to this pandemic situation. And interestingly, 42% of the finance leaders believe that retaining the right talent would be a concern going forward in this today's day and age of digital management, all of those things. So data on the right talent or approve or maintaining those talent would be a key concern today. A huge number of them, 43%, feel that the technology has been constraining for them going real time. Real-time data availability, availability of systems, availability or the ability of their platform, the current platform, the legacy platforms, enabling them for going real time. And 39% of them believe that the strategic level ability to go to real time is still missing. And at a board level, they need to take these decisions and they need to basically come up with a plan, executive plan, to basically ensure that this is mandated from the top to the bottom, that there is no other way of managing the current financial situation other than going real time. So 39% of them feel that the strategic ability or strategic level decision is missing. So these are very concerning numbers coming out from those surveys with the top 450 CFOs. And today we will be talking about how do we basically structure our organizations, our financial divisions using real-time data. Some of the structural trends shaping banks' risk management in today's situation. Trend number one being the continuous changes in the regulation. Regulatory demands are ever changing, and financial leaders and banks' compliance and risk management teams are struggling to basically comply and to ensure that they remain compliant with those regulatory requirements, be it reporting, be it management, be it customers information, technology. So at all levels, the regulation is impacting continuously. And that is something which the bank's finance leaders and risk management teams have to look at using real-time data. Changing customer expectations and customer requirements. With the current situation, there has been a complete shift on the customer behavior, customer spending trends, and how you basically look at those from a financial risk perspective, and the availability of that real-time data for you to make decisions on the changing customer needs, customer behaviors, customer trends. So that is also another trend shaping in the financial sector today. With the ability that technology and analytics will act as a risk muscle to the organization. So the importance of technology and analytics is ever grown. It is a critical element which we basically see today, and people want to basically see how they can actually implement technology and analytics to support the risk management side. Now, we've seen a lot of legacy platforms are limiting that requirement. And that's what we will be talking about, how today's new technology models like cloud adoption and other things are shaping trends in basically delivering real-time data. Additional risk types are emerging, and hence they need to be looked at. They may not be financial, and they may be non-financial, and hence data drives those decisions or those elements, so that key strategic decision at the right time is taken, instead of actually missing out those or blindsiding out those. And of course, everyone today will agree that there is a need for strong cost savings across the entire landscape of the banking industry. Be any department, there is cost cutting happening across, and they need to ensure that the bank's risk remains managed at all times. So those were some of the structural trends shaping the bank's risk management and overall financial health. With this, I will move on to have a very open conversations with our two panelists today. And I would invite questions from our audience. Please feel free to use the Q&A button to ask any questions while we're having this conversation. We would like to keep this webinar an engaging webinar, and we will try to answer almost every question you may ask during this session. And as Nehul mentioned, we will be having some polls. So we would be looking for insights from from your experience, where you are, how do you see it, which would also help us shape any conversation during today's webinar. So further ado, let me get into our panelist discussion. So Graham, I'll start with you. We've all been talking about the importance of data in today's digital world. Everyone is talking data is the next oil, and all our industries are talking about data-driven decisions. But do you think the financial industry recognizes the power of data and the impact it can bring to its businesses, or do we feel that it's just a fad?
Yeah, hi, Rahil. I certainly don't think it's a fad. When I look back at my career, I started my first data warehousing and business intelligence project about 30 years ago when I was a CTO of a bank in London. So I think the industry's been well aware of the power of data, but perhaps what we failed to do is really extract the full value of data as a resource. I think the comparison to oil is useful. It's not complete, I think. Data, much like oil, needs to be transformed to be useful. You think about oil, you need to refine it into something like kerosene or gasoline to be really useful. And the same is true of data. You need to transform data through a process into information. And that's what the bankers, people running financial institutions want. It's not more data, it's actually more information that they need to run the business. And I think where some of us on the technology side have failed over the years is that whilst there are numerous initiatives around data warehousing that are out there, I think they've focused probably too much on the customer side of the business, less on the financial side. For many, financial accounting is a bit of a dark art. It's a bit of wizardry. It's difficult to penetrate from the outside. But the reality is that the performance of any financial institution leads to its balance sheet, to its income statement, to the financial story on performance that's presented at board level. So the challenge has really been around data warehousing. How do you transform data into information? How do you learn to speak finance? A lot of us on the technology side understand the sort of nuts and bolts of data. We understand customers, accounts, balances, transactions. But the bankers speak a different language. They speak in terms of balance sheet through the chart of accounts, income statements, margin, cost of funds, yields, efficiency ratios, productivity, liquidity, risk, and so on. And so it's that bridging of the gap, if you like, from data to information that I think is the challenge. And the true value is not really the amount of, it's not like where the analogy with oil breaks down. With oil, the more you pump, the more value you create. With data, we've seen a proliferation of data because of the internet, a proliferation, especially around the customer and with social media and things like that. But there's less of a proliferation, I think, around the data we need for financial performance management. And that is largely data that's in maybe two systems of record that we all have, regardless of how old or new our underlying core systems are. And those two systems of record are really the general ledger accounting system and the core banking system. So the real challenge, I think, is in financial performance management is how do you marry those two sets of data coming from those two systems of record into one source of the truth that can support other analytics on the customer side in the rest of the organization. So if you're coming from the customer side trying to break into finance, I think that's where the industry has been challenged. But I think increasingly we're seeing the need to actually start with finance and the C-level and spread across the organization. And so if I look back over the years, what became very noticeable to me was that we started off trying to address the whole analytics problem as a data issue primarily. So let me build the data warehouse or the data mart or the operational data store. And when I've sorted that out, I'll address the end user requirements. So sort of build it and they will come type of offering. But of course, you never ever end building it because one of the things about data is it keeps proliferating, it grows bigger, it's time series by. So by definition, there's a sort of continuous growth of the model. So it becomes very difficult to create those value propositions in that sort of bottom-up approach. So what I've focused on in sort of the last 10 years really is taking a more top-down approach to the analytics problem. When you think about it, rather than boiling the ocean with all the data that you can collect, if you actually flip it on its head and say, what is it that the C-level and the management of the bank need? What is it they need on reports and dashboards to actually run the financial institution? And then if you focus on collecting just the data to run those and automate those components, and if you can accelerate that into a daily process and pull together not just the performance of the bank, but the board reporting, the regulatory reporting, tax reporting, financial year close, you now start having a value proposition that's much easier to quantify, to define, and to collect the data for. So there is still a data problem, still a data management issue, but I think taking a top-down approach can yield significant benefits. And certainly the cloud is accelerating that adoption with quicker time to value and the ability to see that information anywhere and any time. And if nothing else, the pandemic has accelerated many of those trends, especially with many of us as we are today, home working. So the ability to access that information in real time through a cloud application is becoming ever more critical to the organization. So I think the good news in summary is that the data we need is actually not part of the big data landscape. It's not part of having to do artificial intelligence and machine learning. The data we need for financial performance is relatively small data. As I say, it's a small data problem and it's structured data, but it is marrying two different sets of data, GL accounting data with core banking data. So you're still taking the customer accounts, balances and transactions, but you're creating a seamless model with the financial view that management have of the organization. So the power is really not how much data you have, it's what you do with it, and it's the insight you can create, and it's how much of your current sort of siloed processes that you can automate.
I like the analogy of transforming from oil to gasoline. So we already seen a lot of data being captured across all systems where we have implemented, but how do we utilize it? Do we utilize it for the right manner? Do we leverage it? Do we take it for strategic decision making? That's very important. So Markel, in your view, how do you see the utilization of data in today's operational teams and other C-level at C-level suites? How do they use data, or what is the importance? Do you think do they give the importance to data?
So yeah, absolutely, Rahul. I mean, Graham mentioned such a number of important aspects and elements there. So the finance industry itself generates a lot of data, and data being one of the most written buzzwords today, I think the important thing as well is for people to understand not only adopting these buzzwords as we quickly go about, but also understanding what it means for the business and how we can actually utilize that. So, and how do we actually apply that practically in our business to make a difference? So the financial sector is probably the most data intensive sector in the global economy. And there's no question that the importance of data is becoming a greater focus. But it's also, as Graham stipulated already, it is understanding how to turn your data into the valuable insights that will actually power your business. So just some interesting thing that I read as well. So according to a May 2018 Forbes article, the amount of data created every single day amount to 2.5 quintillion bytes. So to rephrase that, it's almost 90% of the data in the world was generated over the last 2 years. So it puts things quite, in perspective. So the impact of data in the sector is actually hard to overestimate. And that's why banks have enormous amounts of customer data, but due to their silo and product-oriented organizations, they're not very good at utilizing these rich data sets to turn it into value. So, and with the C-suite can actually use the right data insights to decompose their current business strategies in order to link the data initiatives to the customer organizations, to the organization's value creation processes, and then they can actually monetize it as such. So again, as well, so we in a highly competitive environment and with an ever-growing ecosystem in the financial services sector, banks will need to adopt a data-driven approach if they want to stay competitive. And data will definitely be a strong differentiator in the future competitiveness of financial institutions.
Definitely. So Graham, in terms of the we've seen in our previous organization and previous experiences that at a tactical level, teams may be using data as Markel mentioned, in a siloed basis or a siloed environment, where they may use certain customer data, even certain GL data, or certain, for example, the total loans or some of the ratios, the financial ratios. But do you think, in your view, when it comes to C-level strategic decision making, is it being practically looked at?
Yes, I think it increasingly is. And I think your survey at the top of the presentation illustrated the point. And I come back to, one of the impacts of the pandemic is accelerating these trends. So maybe before the pandemic, the strategic planning process of a bank was fairly well regulated, if you like, or well defined in terms of an annual review and creating the plan and the budget going into the year. But if you think back to 2020, all of our plans, regardless of whether we were in a financial institution or not, went out of the window back in March. And so there was the need to, and effectively has been a need over the last 9 months, to constantly re-plan and re-forecast to react to unfolding events. And I think we've seen that in our customer base, that there is now a demand. It's a real demand from C-level. Simple things like just modeling the balance sheet on a continuous basis. If you've got real-time tools that let you do that, rather than taking that, what you might have survived with previously is taking that as a siloed back office function that you could wait for the results for maybe a week or two or a month to get those sorts of scenarios mapped out. Now, the requirement is actually to go there right now. And, what if my assets contract? What if my assets grow? What if my, cost of funds rises, my yield decreases, there's a compression on my margin? What if my loan delinquency gets worse? So this sort of what if analysis is real. It's there as a need at C-level. And it's, as I say, accelerated significantly because of the pandemic. And I think we're seeing that in surveys, as you said, but also we're seeing that in demand for financial performance management solutions. It is through the office of CFOs and the CEO that's driving this demand. I think there's an impatience with other, maybe data warehousing or other initiatives that have failed to provide the foundation for those systems. So there is a more open mind, I think, to how to solve this problem, which is really why we focused on the top-down approach, because I think allows us to engage with CFOs directly, CEOs. Today, if we see an RFP coming from a financial institution for a data warehouse and BI tools, that's really a signal that they're still of the mindset of the bottom-up, a technology-led data warehouse initiative. I think increasingly that's happening less and less. And I think people are coming around to the view that actually top-down performance management at C-level is really a critical piece. So pulling together forecasting, pulling together budgeting into a continuous process, these are all things which were siloed previously. I can see risk management moving more into risk as a service rather than a sort of quarterly stress test you might do. It's becoming much more as a service. So I think as a service is basically what's happening. It's financial performance as a service, which brings in automation, gives you the platform and the tools to react in real time to information. So I think the message is really, you need to work out what it is you need to measure. You need to work out how often you need to monitor it. And we kind of have a simple saying here that if you get that right, measure plus monitor equals manage. And that allows you to make better decisions, take actions, and interact with your business on a daily basis, which can allow you to actually impact performance. So rather than waiting to month end and saying, how did we do? We have the ability, not just at the central level, but to push that down across branch and channel and business layers to actually say, how are we doing in the month? Are we on track? What can we do to make sure we stay on track and react to events as they unfold?
So definitely, and following on this point, Graham, as you mentioned that yes, the top-down approach, when we talk about CFOs, CEOs, or chief operating officers utilizing these data sets for strategic decision making, but do you see, or in your experience, have you seen that there has been a resist to change?
No, I generally, we find a lot of open door when it comes to having these conversations. I think what surprises some in the financial industry is actually that these solutions are actually out there and these are real opportunities. I think we've been conditioned into thinking about maybe going, RFP and technology-led solutions when there are, what I would call business-led solutions out there now. And across industries, you see this in terms of many parts of the financial process and accounting process is now available in basically in consumption form. You can afford it out of OPEX rather than thinking about it as a CAPEX expenditure. You can run it as a service. If it doesn't stack up, you switch it off and you go somewhere else. So it forces suppliers to give a best of breed approach to the problem. And it actually focuses straight into the business requirement rather than the foundational layer. So we don't start our projects by talking about the database licenses and the servers you need and the data storage that we have to build in the infrastructure. We go straight into what's your chart of accounts, what does your management reports look like, what is the financial story that you as an institution need to tell. And the good news is everybody has the same problem, but it's manifests itself uniquely in every financial institution. So what I mean by that is everybody has their own chart of accounts, has their own products, has their own market, their own niche in the market. But actually the overall problem of managing the balance sheet, of looking at productivity, efficiencies, measuring profitability, all of these things are completely common, whether you're in the microfinance industry, whether you're a cooperative or a credit union, or whether you're a commercial or retail bank. The challenge is the same. What's different is what needs to be, if you like, configured for you as an institution that makes sense to your business, your product lines, and your customer segment.
So I'm pretty sure that the CFOs would be very inclined to actually look at all of these things because today what they end up doing is they get the data or their balance sheet or profit loss even after months, not even after days, right. After months.
Yeah, and I think the CFOs are increasingly becoming, I've seen the word chief futurist officer out there. They really are leading the charge on much of this transformation that's occurring. Because when you look inside of finance, they themselves are quite often very siloed, especially around Excel models to support regulatory reporting, tax reporting, financial year close, management account production. So even within finance, you're seeing different teams working with different data sets, all purporting to come from the same system of record, but actually then being sort of manipulated or analyzed to those specific reporting needs. So I think CFOs are increasingly wanting to see automation in those areas. There's a lot of key person dependency, a lot of dependency on Excel. The regulators are having an effect here. We have customers who are being fined by the regulator because they're too manual in the regulatory reporting, too many errors, even within the reports. They don't reconcile across the schedules and the main sort of balance sheet and statement of income. So there's pressures on all sides really, and at the C-level and board level, there's a need to go beyond the flat reports. So previously, production and management reports, slightly more slower pace, if you like, of analyzing the business. Increasingly, that won't cut it anymore. Yes, it's important to create the system, the statement of financial position at a given point in time, end of month, end of quarter. But you need an interactive system then to actually drill into that and start answering the questions that can't be asked by what's on the paper in front of you. So that ability to marry real-time performance with the hard copies that we need to create as at given reporting dates is really critical to the whole process. And that, when you think about it, that's one of the challenges technology failed, was really understanding that it's not just a real-time continuous process. We do need to report as at end of week, end of month, end of quarter, end of year for a variety of external stakeholders. So our systems need to be able to understand that, need to be able to, for example, go back and restate, fairly obviously month end using value date rather than posting date. It's not all a real time is the only answer, if you like, a continuous stream of data. We're still fairly old school in a way in terms of that batch extract that we need at close of business, because that's the reconciliation point. Can I bring all of my loans, deposits, customer balances? Does it reconcile to the GL? Does it reconcile to the income statement? Now I have a solid platform from which I can actually go down by branch, by channel, by loan officer, by customer segments. And so it's that single source of the truth coming from the systems of record. That is the kind of holy grail, the elusive thing we're trying to get to and build into the performance management solutions within financial institutions.
Perfect. With this, we would like to go to the audience for a quick poll. Nehul, can you enable the poll, please, for the audience?
Sure, let me do that. We're the first one. So it's now launched. So we're talking about, which of the below use case is data used in your institutions. And we've got options. The first one is regulatory reporting. Second is institutional profitability analysis. Third is new product or service launch. And last is either you end or modify an existing product or service. Please, you can choose either one or all of the options based on how you're executing it within your institutions. Just people are still responding, so we're just going to give them some more time, a couple of more seconds, if you don't mind. We've still got responses coming in. Right, last couple of seconds, I think, and then we'll be ending the poll now. All right, we're now ending the poll, and thank you. Rahul, back to you.
And I think what we've seen from the audience is Graham and Markel, they responded in regulatory reporting is one of the biggest use case, and the profitability analysis. Whereas new product service launch is also, people have responded on that aspect. Plus ending is a little bit lower, but the three key outcomes is institutional profitability analysis, what Graham was mentioning about from a chart of accounts and from a GL perspective, from a finance leader perspective, regulatory reporting, as I touched upon, the ever-changing needs of the regulators. And of course, looking at from a customer standpoint, how do you use that data to basically drive those new strategic decisions?
Absolutely.
Great. So let's basically move on to our next question. So Graham, as we were discussing, as you rightly mentioned about the data sets and everything, do you think these data points are available in today's legacy systems?
Yes, no, absolutely. So, when you think about it, any financial institution has to produce their management reports, their board reports. So the data is definitely there in those legacy systems. I think it's less about the agility of those legacy systems, more about the agility we apply to the data we can pull from those legacy systems. Let me give you an example here. We have a customer that operates in more than 32 countries, and the original concept of the project we had with them is they were renovating their core banking system across those 32 countries, focusing on 2 core systems. And they wanted us to follow on those 2 core renovation projects in 32 countries by implementing a financial performance solution. But what they quickly realized is that renovating the core banking system is not a small undertaking, as you're well aware of yourself. So the challenge was that was going to take many years, and yet the need and demand for that real-time performance information was there right now. So that's where we flipped the project on its head and actually went to the legacy systems, pulled just the data we need for what the organization needed to manage its global loan portfolio. And this is a microfinance institution that operates globally. And so the need was really to pull that data real time. So what we did was flip the project, which enabled us, mutually to sort of paper over the cracks, as it were, of the legacy system, pull the right data, transform it so that it was unified across different countries, different languages, different currencies, but it pulled into a unified performance management layer that the business could interact with and understand. And I think that's a good example where data is there, but it's what we do with it, how we put it together, and how we tell the financial performance story. And it is a story. You can think about the board report as being a close sort of approximation to that story. So if anybody wants to know what is it that I need to run a financial institution, well, go and look at your board reports, because there is a 10 or 15 page document that has been created by the CFO typically to feed to the board to analyze and summarize the performance of the institution. So if you scale that back into, let's say, a real-time solution in providing what are the metrics, what are the drivers that impact that performance, then you're getting close to what you need in a financial performance system. So we don't run a financial institution by producing a balance sheet every day, but we do measure the performance periodically by looking at the balance sheet and the income statement. What we need to look at every day is what is going into that balance sheet, what is changing, what is the new loan production this month, what is my liquidity, my source of funds, my deposit taking look like. If we're in the business of making loans, then we should be analyzing the loan applications, the loan origination process. This is the leading indicators, which is going to tell me what I'm going to disperse maybe next month, which is then going to flow, what yields is it going to flow into my existing loan portfolio. So by starting with, if you like, the end result, working back through the various components of then the drivers, we start to get a data set of what do we need to measure performance on a daily basis? What do I need at the channel branch level? And then what do I need to see at the C level? And there's slightly different levels of granularity, but it all comes from the same data points in the legacy system.
Definitely. And see, this is where the approach is now changing, I believe. And going to back to your point of how you take that data and give it into operational use, Marktil, what in your view, how do sales leaders within the financial industry or operational leaders in the financial sector, how are they using this information, or they're still reluctant of them using more customer data rather than the financial data of the organization, and what direction the bank wants them to take?
Yeah, good question, Rahil. So I think, as we have identified as well, and as the statistics showed, a lot of the banks, they still agree, yes, that the real-time data is very important, yet very reluctant to still use it. So there are a couple of key points, or key data points that they need to keep abreast of. And whilst the financial results are really, really important, also through a lot of research done, the best performing organizations know that their financial results are a product of operational decisions and the actions, as that level of productivity translates into the outcome of the EBITDA. In a McKinsey study done in 2019, it stated that financial institutions need to do a big picture board level thinking, just as you said in your introduction. And they need to think about how to prepare for the revolutionary impact the digital technology will have on banking operations. So operations consume about 15 to 20% of the annual budget. And thus transforming these functions will lead to a significant improvement in the profitability and will return more capital to the shareholders. It can also boost the revenues by enabling the banks to provide better products and services to customers. So there's numerous things that the bank needs to look at. However, from an operational point of view as well, so a lot of the things that we have actually mentioned throughout the discussions now, a couple of the key points that they need to look at is the business growth. So in order to meet the sales targets, like new accounts opened, look at possibly mis-selling of products, new offerings, and so forth. Next important thing would be the customer preferences and experience. But although these things are so closely linked to the bank's performance as a whole in how they need to keep abreast of the industry, is customers have high expectations and the availability of services that the banks need to provide. You know, there's no secret that the customers would actually change really quickly to a different bank where they can actually make use of better services that appeal to them. And that leads then to the product offerings that the banks need to look at. So the banks are undergoing the digital transformations to produce digital friendly products, and digital native products can be created by modernizing the infrastructure and collaborating with the third-party providers through open architecture models using the cloud. And that will eventually help reducing the cost of products as well, which again links very much to the statistics that you have provided in your introduction. And then lastly, a very key point is the operational risk. So we know that the risk of the losses due to the errors and breaches and interruptions or damages, you know, whether it's either intentional or accidental, it could be caused by people, the internal processes, systems, or external events. So those are all the important points that the banks need to look at that will eventually be the outcome of the financial results as well.
So I think there has to be a marrying of the financial data with the operational utilization of it, because at any given point of time, if the CFO is taking some decisions and they're not being implemented or they're not being executed by the operational leaders, I think we will see another gap on that side as well. So I think, yes, what Graham mentioned about how the financial leaders should be looking from a different angle, and they should be driving those decisions and those interactions with their operational leaders would basically show a new area of strength for the organization and the financial institutions. And I think running in silos, because in our experiences as well, I've seen the finance department not talking to the business departments, or not talking to the IT departments, or on so forth. That animosity was created already, and I think that those silos needs to be broken down, and the CFOs have to take the decision-making approach that, okay, how do we impact, how do we drive, how do we influence our operational business teams on actually delivering what is required from both from a customer perspective as well as from the stakeholder perspective. So I agree that we need to see from finance departments, from risk management departments coming in, utilizing the data and influencing the operational leaders of how should they be executing, or even taking strategic decisions like new products, as we saw in the poll as well. So on this point, we'll go back to some more polls. Nehul, can you share the poll for the audience, please?
All right. So we're going to be running two polls back to back at this point. And once again, request to the audience, please do share your views. The second poll that we're running right now is, do you have a solution that monitors daily financial performance rather than just reporting at month end? Of course, it's a single choice response. So please do let us know your views, and it'll be good to have people's feedback. And the panelists would obviously, at the end of the panel discussion, share their insights in terms of what they believe the answers would be. We're still seeing some more responses coming in, so let's give them a few more seconds, and then we'll move on to the next poll. In fact, I still see some more coming in. All right, a few more seconds, and then we'll end the poll and move on to the next one. All right, ending this poll. Thank you everyone for your participation, and please do participate in the next one too. All right, the next one again. All right, here's the third poll question of the day. Do you have a centralized data repository which provides relevant information to all stakeholders? And I think this is something that we've seen our panelists discuss quite heavily today and whether it's taking a bottom-up approach or the top-down approach. And I think this feedback from the audience would be really great to have. We're still seeing some more responses coming in, so let's give them a few more seconds to respond. Great. Last few seconds, let's get them rolling in, and then we can move back to the panelists for the next part of the panel discussion. All right, I'm ending the poll now. Thank you, everybody. Right, Rahil, back to you.
Thank you, Nehul. So, Graham, as we were discussing on that, banks have implemented data warehouses, they have bought visualization tools, they've bought analytical tools across their thing. Do you think that if I ask you from the other perspective, that banks are already doing all of this, banks are still surviving, banks are taking decisions, what is that need or a big difference what real-time data can create for them? Because they can argue that we already have invested in large data warehouse projects, we've spent money on fancy dashboards and visualization tools and so forth, and we're taking decisions on a daily basis. So how is it different, and is there a real difference in that when it comes to financial data?
Yes, I think increasingly, I think historically we've looked at analytics as requiring some fancy visualizations, and the sort of democratization of the business intelligence tools by, Tableau, Click, Microsoft, and the like has led to a view that simple dashboards with great graphics is what's required. But actually, if you speak to the C-level suite, they actually survive on numbers. So the need for fancy visuals, I'm sorry to disappoint anyone, but there's no killer dashboard out there with one dashboard that the CEO is going to use with one metric on it to run a financial institution. There is a story to be told, and that story is in the form of the chart of accounts, financial ratios, and so on. And that story is built up, it's a bit like a small book. Good news, it's not War and Peace, it's not Harry Potter, it's a small book of a number of chapters. But we do need to answer, simple questions like, what does my balance sheet look like? Where am I earning assets deployed? What's my cost of funds? How's that changing over time against last month, against last quarter, last year, against budget, and against my peers? So the difference is really that financial reporting is historical and looks backward, as we all know. When you accelerate the reporting into a daily real-time process, reporting suddenly becomes a performance tool. It's something that can now supplement my daily process. It's giving me a backup to the intuition I have as a banker as to how to run my bank. And it's giving me the data points that's going to reinforce my judgment calls that I'm probably making off the back of financial static reports. And I think that's the difference. And again, pandemic has changed the world. We need to react more quickly. The data points are changing more quickly. We can't now rely on something that was produced 2 weeks after last month end and assume it still applies. If I look again at last year, we had customers in the United States who, through the stimulus package that the US government put out there, which resulted in payroll protection loans going in, PPP loans going into commercial banks and community banks. Some banks' balance sheets nearly doubled in the space of 3 weeks. Literally in the space of 3 weeks, because once the program opened, they processed those commercial small business administration loans, their balance sheet shot up. So you can imagine the liquidity, cash flow, profitability, balance sheet modeling, balance sheet management impact in just 3 weeks. And you could see that on a daily basis.
Off the charts. The ratio would be off the charts.
Off the charts. And what it also does is it kind of invalidates any of the historic peer analysis that you might do as an institution, because going forward, you're going to have to compare yourself with like. Was this commercial or community bank doing PPP loans in the US? If they weren't doing those loans, it's an invalid comparison because they didn't live through that growth in the balance sheet that they lived through during the March, April, May period. And because those loans can be forgiven, there's an unwinding process that's happening now. And of course, with the new president, there's probably a new stimulus package. So that's just one example in the US. In other countries, you saw governments mandate the whole rescheduling of loan portfolios. So suddenly institutions had to react to every loan being rescheduled and then going through refinance, restructuring, wanting to analyze that on a continuous basis. And as financial institutions started to understand that they needed to help their customers, they start implementing recovery programs for those customers. So again, you need to monitor those on a near real-time basis to really understand what's the take-up. Are we hitting the right segments? Are we helping our customers survive this economic pandemic time? So I think events have kind of overtaken to somewhat, and I think it's accelerated those trends, which were already there. We were seeing signs of those pre-pandemic, but I think, and the first wave of the pandemic was about survival, was about maybe spending on digitally reaching customers who were unable to reach physically. But now we've got through that first 10 months of the pandemic. I think the second wave will be about cost savings, will be about efficiency, will be about supporting staff. 60-70% of staff in banks are working from home. We need to be able to provide them with solutions that doesn't require big investment in remote systems access. And so it's all leading to a model that is enabled by the cloud, and a model that is getting quick time to value for these organizations.
Graham, hold that thought. I'll come back to you on the cloud question. Markhild, from your views, how do you see some of the practical experiences or practical examples of such C-level suite embracing data, embracing new platforms? And also one more point, you have been in selling technology services to banks, larger institutions. Do you think that the cost factor drive these decisions, or today cost is not a sensitive topic when implementing such solutions to acquire real-time data?
Well, cost will always be a sensitive topic, in any business and what any bank and any client that you always deal with, they always want to save cost. The most important thing is understanding the value that it will bring to the business. And key driving decisions people will always make on pain or pleasure. So once they understand the pain, that they actually experience and the pleasure that actually moving into this direction and making use of the real-time data and how it will actually impact their business and reduce the risk and help them with better decision making, that is the value that one needs to drive through. And it goes without saying, and any of us that actually when we make those decisions, so it's really bringing that message forward. And banks definitely will start adopting this more and more and more, because as you can see, the trends are going forward more, with the fintechs and everybody taking on in the direction being more competitive to the banks. There's no doubt that the real-time data system improved decision making that will only add the competitive edge, to those who have adopted and embraced the use of data, turning it into insights. So especially, and as we mentioned earlier as well, so especially in the current times where countries are still in lockdown and have restrictions of movement, data should be at the heart of the digitization. And this is where the more awareness we bring to the banks in how this can actually help them, the faster the adoption will be. The pandemic, as we said, already accelerated numerous banks and organizations to move in that direction. It is up to the banks to use this rich data sets that they have, collaborate with third-party individuals and help them on this journey, and working in collaboration and as a trusted advisor level to help them reduce the cost, but also increase, the value of businesses that they bring to their customers as well as internally to their stakeholders.
So in your experience, while managing such clients and basically bringing such solution to clients, can you share some examples, practical examples, that how they have impacted their business today?
So Yes, so definitely. So one of the oldest financial institutions in the Middle East region, actually we sold a product on regulatory reporting. And we helped the client by implementing our digibank regulatory reporting solution by enabling the bank to automate the entire regulatory reporting process. And the platform provides a daily capital adequacy ratio without any manual intervention, allowing the finance, the risk, monitor, and the bank statutory position. And the solution helped the bank to become compliant to the ever-growing needs of the regulator, whilst allowing the management to take critical financial decisions in real time. And this we have done in 2020. Also,
Great.
another one that I would like to mention just on top of that was we helped one of our long-standing clients, one of the largest government banks in Asia, manage their Islamic deposits and fully automate the profit calculation and distribution process. And that was cutting down the manual process from 12 days to hours. So the solution gives a data-driven view of the bank's liability and the asset book, and enabling the business team to deploy the resources efficiently, whilst the treasury and the finance teams are able to deploy the funds more effectively. And that's managing the risk profiles of investments and the lending book.
Great. Graham, on to you. As you mentioned, there were some practical examples from the pandemic, the US program as well. How do you see practicality taking over such decisions, and how they have been benefited even the pre-COVID scenario?
Yeah, I think what I've seen increasingly is finance departments reaching out for the types of automation that Makdil just talked about. We have a bank here in the UK, which we were engaged with prior to the pandemic, but there was a notable shift in gears once the pandemic came in. There was a sudden realization that working from home, current systems weren't always available to all the right staff. And the solution we were implementing was largely to drive their financial performance management, automate their management reporting, feed their regulatory reporting solution with that single source of the truth, as it were, but also push information down to their branch management structure. So their branch managers were able to see every single day, and this was an Islamic bank here in the UK, so they're looking at their asset finance, they're looking at the deposit taking, their liquidity against their targets on a real-time basis. And so it is that monitoring on real time at the operational level that allows you then to cascade that up to management reporting and performance, and take those decisions and effectively share those decisions across the organizational structure. So I think it's universal across different sectors and different different countries and economies. What's also driving it is increasing acceptance of cloud, the lower cost of ownership of cloud, the fact that cloud can allow you to get a quicker time to value. And the more, I've been in this current business for 7 years, and there were no Azure data centers in the Middle East at that time, as you know. So things are changing very rapidly. There's a growing acceptance that cloud is safe, cloud is a lower cost of ownership. Even companies that previously hosted systems in their own data centers are now migrating to the public cloud because of that lower cost of ownership, because the security model is probably better in the public cloud than they can actually often in their own data center. And I'm someone who ran my own data center in the banks I worked at, and I've visited a Microsoft Azure data center in Dublin, and there's absolutely no way any of the banks I've ever been to can get anywhere close to the security that Microsoft has deployed around its data centers, both at a physical and logical level. So I think that acceptance is also driving that change. And as I say, increasingly finance departments are becoming the lead agitators, the lead instigators in bringing in that change.
No, I think yes, definitely the cloud adoption across the regions, and not just Europe, as we've seen before, Middle East, Africa, Asia Pacific. The cloud adoption is increasing, and a lot of multi-cloud players are supporting this instigation for the finance teams to making sure that they are able to provide that confidence and provide that security to the finance leaders and saying, okay, this is how the cloud can basically support your data security, the agility, and the availability as well. Because we have seen that you may have good data centers and you may have large data centers, but just getting the access to the data for finance team takes days, literally days on that access. So the agility is basically lost. And no matter how real-time data you may have available, if people cannot have access to it, we've lost the whole game. So on that point, thank you very much, both of you, both of the panelists, for this very intriguing conversation, interesting conversation. I would like to, Nehul, I would like to come back to you on the poll results, and if we can take some question and answers from the audience, if possible.
Sure, absolutely. So let me just share the poll results of the polls we've covered so far, and it'll be great to get your feedback. And then I'm going to move on to the audience Q&A. Just cognizant of time, I know we've just spilled over the designated hour, but I think it's a great conversation going on, and I still see a lot of our audience members asking questions and part of the event still. So let me without wasting further time. Right. So the first poll, that we ran was around the use cases for data within these different institutions. And what I'd like to do is actually ask, Rahil, you from both perspectives, and to address this one. And what's your view around this? From what you think the audiences have responded back to.
No, I think we have clearly outlined it, and as I mentioned in my initial insights, that the use cases for data utilization is there on the profitability analysis, as Graham rightly mentioned, the regulatory reporting, product service, as Mark Till mentioned, on the operational side. So I think what we see insight from our audience, as well as what the market is saying, I think they're very much in line on that.
Okay, perfect. So let me move on to the next one. So this was where we were asking if they have a solution that monitors daily financial performance reporting. And Graham, would be great to get your feedback. We've got about 29% who said yes, they do have, and then almost a similar number who've said they don't. So it would be great to get your feedback on, what do you think?
Yeah, I'm a little bit surprised by the yes, 29%. I think that in my experience is probably higher than, but there again, I'm probably dealing with those that don't have it by definition. So maybe my view is a little bit biased. Clearly in the audience is a number of people that don't work in financial institutions. So which kind of backs up the first poll. I was a little bit worried about the regulatory reporting, only 60% using data, because you wonder what the other 40% are using. But if they don't work in financial institutions, perhaps that's the answer.
Yeah.
So yes, I think the poll's interesting. I think the 21% was probably a little bit lower than I was expecting, but nevertheless, it shows there is a definite demand and need out there in the industry.
All right, thank you. Let me move on to the last poll that we ran. And there you go. This is about whether you have a centralized data repository which provides relevant information to all stakeholders. Macto, if you would like to comment on this one. We've got about 30% who say yes and 15% who still gone ahead and said no. Whereas the number of people not working in financial institutions have actually gone up between the second and the third poll. But well, Macto, your views.
I would actually like to give this one to Graham. I think he would be in a better position to answer this one. Yeah.
Well,
yeah,
sure,
I think it depends on the audience to a large extent. I was asked the question: if you have a centralized repository, does finance rely on it for their regulatory reporting in the way that Mactil describes? Because I think you might get a different answer from the IT side of the business than you do from the end users. Not being disrespectful to IT, I do come from an IT background, so my cynicism is born out of my own experience, shall we say, of when I was a CTO in a bank. So I think, yes, I think the polls are interesting, but you kind of have to do a little bit more research and digging into them. But I think it's a good temperature test. I mean, I think, again, the no seems a bit low. But as I said, my qualifying question would always be how much of the regulatory reporting, the automation and management board pack, financial close, tax reporting, how much of that is actually coming off of those repositories. So having it is one thing, getting effective use and value out of it across especially around the finance department is another thing.
Brilliant, brilliant. Well, thank you so much for your views. I'm going to move on to the audience questions that we've received. Let me see the first one. The first one we have is, how do we manage status quo for groups within financial institutions who resist change? I'd request Graham, you and Rahil to address this question, in a couple of sentences, if you don't mind.
Yeah, it's a really interesting question, actually, because we've seen projects that have been instigated by the CFO and actually found resistance within the finance department itself. So, and when you think about it, it is understandable. If you've been in the finance department for 20 years and you've been working in a certain way, with your own siloed data set and your own expertise on the subject matter, I think there's a problem in many instances where these projects are instigated, that psychological or social or economic effect on the stakeholders within the department, who are often the ones that are expected to step up and sort of be the domain subject matter experts, they can themselves be blockers or resistance to change. So increasingly, we understand that we have to deal with this at a high level. We identify these areas of resistance and work out a strategy, not just ourselves as an outside party, but work with the stakeholders who are sponsoring the project, because we have seen projects fail for this reason. And then people scratch their head and say, well, all the right ingredients were there, the will was there, the budget was there, but somehow this didn't work, right? And it turns out sometimes you get sabotaged along the way, and you need to manage that. And it's a real concern, and I understand it. I mean, people have to be sort of educated that there is life after automation, that there is a different role to play that adds more value to the institution than just massaging data to produce results. And so I think that's the selling point that needs to be created within these types of projects and initiatives.
Right. Rahil, your views?
Yeah, I think as Graham mentioned, there is always resist to change. As you've been seeing, people doing certain things in their ways, having certain teams, and then moving to automation and other things, it brings those resistance, of course. But I think the good leaders are able to actually navigate through those changes, through those resistance within their teams, and they're able to, as Markel mentioned, that as those leaders try to showcase the value to their own teams, then that resistance becomes less, and they're on board. So it is very important for be it even we always talk about bringing IT guys on board, but we never ask finance leaders to bring on other team members on board as well, who may be the resistance showcasing. So I think the resistance will always be there, and I think it should be there, because that is how the actual evaluation process works as well. You see resistance, you're able to convey the message, you are able to convey the value, and then manage those resistance. And I think they convert very easily if you bring them on board from that resistance perspective, and you're able to showcase the value you are delivering to the organization.
Great. Well, thank you for that. We've got a couple of questions which are kind of similar, so I'm going to club them together and ask the panelists. And it's got to do with cost, right? So the question is cost complicit in deterring this transition to real-time data for financial institutions? And the second one, which kind of clubs along with it, is how do you get smaller institutions on board in making the cost trade-off in implementing real-time data for projected benefits in the long run? And I think all three of you have actually touched on this point through your discussion this morning, and would be great to get a couple of sentences from all three of you on this particular questions.
Yeah, I can jump in there first if you like. So
sure.
It's one of the reasons in this current business that I started 7 years ago, we made it cloud only, because we knew we would be able to design a solution that had an effective cost point for all sizes of organization. And so I think the key to that is the way you design your cloud applications and being able to build a platform as a service that scales for all of your customers, not just having to scale it for individual customers. So actually cost is one of the least important factors for us and our customers. It is actually, when I say cost is the least factor, I mean the cost of hosting systems and running those systems and making it real time. That's not the issue. It is that transformation capability. It's identifying the right source of information, building that transformation layer, and being able to pull that data on a real-time basis and not boil the ocean, as I said before, in terms of data, just the limited data sets you need to support the financial performance management. So with the right solutions, with the right cost point, with the right predefined design of the data, you can pretty much guarantee success for all sizes of institution. And we have, from the smallest microfinance to some large banks using exactly the same solution. And so we have the proof that that actually can be delivered and does work.
Matil, your views?
Yeah, Graham touched on so many elements there and he made such good points. So I definitely agree with what he's saying. He mentioned right through from what small institutions to large institutions should do. There's not much more that I can add to the valid points that he made.
All right. Rahul, anything to add?
Yes. So see, cost always will be a sensitive point, as we discussed. But when we are able to show the value, the cost benefit analysis, I think cost is not that high. It's just how we present and how do we scale it up. Rightly mentioned, with legacy systems, the problem is that an upward investment or an upfront investment to be done. Whereas with the new modern technologies of cloud, you can scale it on an OpEx model very easily and not have that burden. So the costs are there, but I think when you compare it with the benefits it reaps, the value it generates for the internal stakeholders, external stakeholders, and even from a client perspective, you're able to deliver new products at a speed. You are able to deliver new services, new solutions. You can generate more revenues out of that. So automatically, it sets off those cost factors or cost considerations issues when deciding such a real-time decision platform.
All right, great. Thank you so much. There's one more question where we're talking about visibility across the landscape, right? In terms of whether it's specific dashboard for viewing the right contact across board. How are banks stopping data which makes less sense and prioritizing value data in which there is an influx due to multi-modes of data source? And again, I think, Graham, both you and Matil have spoken about the siloed approach of data residing within the institutions and identifying and prioritizing, which data to take forward and converting it into relevant information or actionable information. Would be great to get thoughts from both you and Matil on that one.
Yeah, so again, I'll jump in there first if you like. I think banks in the small, medium tiers, I think, realize that not everybody can be a data scientist or a data analyst. And whilst there are visualization tools that appear to be free or free-like or fairly low cost, that's not the solution. I think you end up with a very siloed approach that does not integrate or reconcile. So I think increasingly banks are looking for a best of breed solution that has been tried and tested and can be configured to their chart of accounts and their product set. We see very little change from institution to solutions we provide now. Yes, there's high configuration, but very little customization. And I think it's bringing domain expertise to the market that meets the requirement, that can really accelerate the adoption of these systems. We don't have to go and build it and ask you what you want. We can show you what we've got. And if that fits your model, you can really accelerate the process. And I think that's what we're increasingly doing. And increasingly, bigger banks are seeing that opportunity as well. As you see them, spin off digital and challenger banks, as you see them buy more core instead of legacy systems, they're all looking for a stack now in lots of different areas that complement each other and give the complete picture in this cloud-enabled digital world.
Great. Matil, your views?
Yeah, I think I can actually talk for hours about the difference that siloed approaches can make to an organization, and especially the data that can come from it, but the risk to your business at the same time when you're not actually using this, in the right way to, as Graham mentioned in the beginning as well, to have that one source of truth. And all the data that you have, whether you're working in a siloed approach or not, will give you that one source of truth, enable you to where you need to go to as a business. And it'll actually give you much deeper insight that you have not understood that you really have available in order to accelerate and power your business in terms of where you need to go. So the key point to actually remember there is understand what it is that you want to achieve, having the top-down approach, as Rahul mentioned. Having the top-down is understanding the strategic initiatives that you need to drive as a business, where you're going to go, and the key points that you need to measure. So from there downwards, you will actually need to then determine what are the key data points for each of those elements that in your data-driven approach that you need to achieve, and your growth areas in your business that you have planned on where you want to go. So top-down approach, understanding how you can actually collate all of this data in building that into your strategy that will give you that insight and the story, as you will, in terms of where you need to go with linked to those initiatives in terms of what you plan for the next 3 to 5 years.
Great. Thank you so much. I think we really gone way overboard. So let me, any unanswered questions, please rest assured our panelists will respond back to you via email, or we'll send the answers back to you via email. So to bring this whole session to a close, first and foremost, let me thank all our speakers and to you, our audience, for joining us today. I really hope you found the session as engaging and interesting as we did, right? And I'd also like to invite each of our panelists to, to give us a couple of sentences, right, to close this off nicely. But before we do that, at the end of the event, we shall also be asking you to share your feedback. And I request you all to please share your views and help us ensure we get the right information and insight out to you, right? So I'm going to first ask the lady in our midst, Magdal, any closing remarks, please?
Well, we have touched on a number of important points, a lot of valuable insights across my research as well, and in my career. It is just apparent that the impact of data is hard to overestimate, and there's no other choice for banks to adopt that and move in that direction for them in order to stay competitive. It will definitely be a strong key differentiator for them to stay ahead of the curve.
Great. Graham, closing remarks, please.
Yes, I think top down, think C-suite, financial performance management, think minimum data set, not maximum, think cloud.
Great. Rahul?
Yeah, I think both panelists have covered very well the overall session and the need. And from my side, it's basically how do you adapt to the new changes? How quickly or how agile are you as an organization or as finance division to be able to utilize the information which is available to you and translate that into more operational and strategic decisions? It's just how you convert your oil to gasoline. That would be my closing remarks.
Brilliant. Thank you very much, all of you. Again, to our audience, thank you for being such a kind and engaging audience. It's been absolute fun having you all on board. Recordings of this session will be available within a couple of days, and they'll be part of the email that we send out to you. If you need to get in touch with any one of us, please do not hesitate to send an email out to marketing@codebtech.com, and we'd be more than happy to connect you to the panelists and having them answer any further questions that you may have. Thank you once again, all three of you, for sharing your experience, expertise, and insights today morning. Really appreciate it, and wish you all a very good day ahead.